Okay, everyone, we are going to begin. Thank you so much for tuning in to Kiser Group's virtual mid-market summit. The mid-market summit was something that we started several years ago as a live event, and for obvious reasons, we're making it virtual this year, and are so grateful to all of you who have attended and to our panelists. So this is the third Wednesday in a series of panel discussions we're conducting on the multifamily market in Chicagoland. The first discussion was on technology. The second discussion was on finance. And today's panel is on construction. The recordings from the first two events are on our website. Go to kisergroup.com, click on the Mid-Market Summit tab on our website, and the recordings are there for you to see. This recording will be up in the coming week on our website as well. Today's discussion, again, is on multifamily construction, and Kiser Group's director, Matt Halper, will be moderating the panel. So with that, Matt, I will turn it over to you.
Thank you, sir. So this should be interesting today. We've got 4 different investors, developers, redevelopers, and contractors, each with their own perspectives and experiences. And I think construction is always an interesting topic. There's always changes. Every day is different, but especially in this post-pandemic world, and I say that optimistically because I think we truly are coming out of it. It's interesting the challenge that everyone has been having. And then when you add in things like the material pricing and affordability requirements, what are the challenges today? So I'm really excited about what I'm going to learn in the next hour or so. So maybe if we could start, if each panelist could just give a little something about themselves, essentially the elevator pitch, who they are, their company, what they do, some key projects that we might know about. Maybe start with Mike.
Sure. So this is Mike Obloy with 3F Construction and Monroe Residential Partners. Most people know us for 3F Construction here locally in Chicago. We are renovation contractors that focus and specialize on, mid to high rise multifamily renovation in the city of Chicago and surrounding suburbs. Just kind of a quick anecdotal piece of information about how we got to where we are. We are residential real estate developers also. We develop ground up multifamily, primarily out of state, in Michigan and Montana as our areas of focus right now. My partner and I had been renovating apartment buildings for ourselves, kind of coming out of the recession in 2009 and 10 with a small fund. And a friend of ours who's a colleague in the business in the Chicago market had contacted me asking if we could help them support their renovation of a 1,600 unit portfolio that they had secured on behalf of a client in the south side of Chicago. It was new to us because we had never done something of that size. We'd always renovated 6 flats and 10 flats and 3 flats. But we utilized some experience that we had early on from the recession, where we were helping a company scale up an acquisition business across the country, and used the combination of our 6 flat experience, procuring all our own materials, self-performing a lot of that labor, and then applied it to some of the scalability things that we had done in the past, and helped that company renovate about 1,000 of those 1,600 units. And one thing led to another. What we had found is we had uncovered a business from our perspective that was very strong for Chicago, renovating mid to high scale or large scale apartment buildings in Chicago, and decided to shift our focus. So today 3F Construction is a renovation contractor that's for hire. We do third-party work almost exclusively, and we are coming out of the largest condo deconversion in the city of Chicago, at least in terms of ones that have been completed, which was River City. I think we've completed about 400 units to date on that project, as well as maybe a dozen or so other high-rise projects in Chicago for other clients. So that's a little bit of background on us.
Great. Adam?
Hi, Adam Friedberg with Maverick Development. Maverick Development is kind of a full service developer and general contractor based in Chicago. We say full service because we really do everything from conceptualize the project to finance it, raise the capital, and then we physically do the construction. We have our own general contracting company. We, unlike 3F, we don't do any third party GC work. We only do our own. And a couple projects that we kind of have either finished or working on right now. We have a 30-unit project in Uptown on Sheridan that we are finishing construction on in the next couple weeks here. It's called the Mondrian. It's 30 units. We built it in 9.5 months, and we're about 25% pre-leased. And then we have a project in Cleveland, Ohio. 171 unit ground up project there that we broke ground on last month. And then we've got a 60 unit mixed use project, part of a JV with GW Properties that we are starting in Uptown on Sheridan and Sunnyside here in a couple weeks. So we're fairly active in Chicago, Cleveland, Ohio, Columbus. We've got a project in Colorado. And I think the unusual path part of the question would be, and I'm sure this is true for a lot of the speakers on this, is that I think to be in this business or to be in this position, you've truly got to embrace the entrepreneurial spirit. So I never had a job where I was a salary worker. Maybe I sold lemonade as a kid once, so I don't think I actually got a salary for that. But I think the commission-based model really makes you go out there every single day and create. And I've always been attracted to the tangible part of real estate, going and feeling and experiencing what we're creating is just the most validating part of the job. And so I'm a professional problem solver. And I think my path here has been anything short of normal, but wouldn't do it any other way.
Rob?
Yep, Rob Sekula with North Park Ventures. Similar to Maverick, we're a vertically integrated real estate developer here in Chicago. We develop, manage, lease, finance, and have our own GC license and have GC some of our own stuff, but typically work with third-party contractors such as 3F on most of our projects. We're actually currently working on a 115-unit condo deconversion rehab with 3F, and have done a few condo deconversions now in Chicago. That was our third one recently in Lakeview. We are not stuck on Chicago. There are great opportunities in the market, so we are currently under contract on a 330-unit portfolio in Minneapolis that we're closing on in about 60 days. That will pretty much perform a rehab on as well. We own some property in Indianapolis as well, but we love Chicago. I think there's tremendous value here over the long term. There's a couple of kinks we got to work out in the state of Illinois and the city of Chicago, but we believe that will be worked out over the long term. And an interesting fact about us is we've started North Park in 2017, so summer of 2017, so almost 4 years ago. We bought a 4-flat out of foreclosure in Lincoln Park, and then simultaneously about 30 units of Section 8 housing in Zion, Illinois. So two very different properties, but not really sure, what we were doing. We were sort of just trying everything out and quickly realized that we'd prefer to own property in Lincoln Park than Zion, Illinois. So we sort of, from that point forward, focused on the neighborhoods in Chicago and primarily focused on Lincoln Park, Lakeview, Old Town, West Town, Ukrainian Village, Edgewater, just all sort of the key, great neighborhoods that Chicago has to offer. So we usually look for existing buildings that offer a lot of value to uncover through rehab and in-house management and in-house leasing, and have stayed pretty busy and active over the past 3.5 years or so. So that's who we are.
David?
I'm David Blitz with Blitz Lake. couple of our recent projects are we just completed Panorama up in Lakeview. It's 140 units above retail. And then we just about a year ago, we completed 2 years ago now, we completed Duet in Lincoln Park, the ground up again, 30 unit, 2 buildings, 30 units above retail. We also did, I think we've done 3 projects now in Lakeview. The Target, everyone knows there's the Target building at Clark and Belmont, Lakeview 3200, 100 units above Target. So we've been, we formed Blitz Lake about 12, 13 years ago, my partner and I, and we've, we've worked on about 10, 11 ground up, couple, commercial conversion projects, rehabs. We've completed 3 Studio 3s. We've done all the construction there. And kind of the fun fact going into that about us is that we're, it's sort of become our, real estate development was like 100% of our business. My partner's a trader, and now we're really become gym operators as well. So it's we're sort of got our hands in a lot of buckets now. So we're investors, traders, real estate developers, gym operators, and we've kind of grown this company, pretty diverse and large over the last 12 years.
So I got to ask, David, the gym operator, put your gym operator hat on for a minute. Like in the last few days, what has been the response from your customers, your members?
Well, it's interesting. You're referring to the mask mandate. Mm-hmm. Initially we were going to check everyone's vaccine cards, and we can't please everybody. So we decided to just go on the honor system. Mm-hmm. And there was, I think people are thrilled with what's happened. We're seeing a large amount of people come back so far, but it's just, it's been a day.
Yeah, right.
Chicago went lockstep with the state of Illinois yesterday, and the state of Illinois went, they changed their mask mandate about a week ago. So, mm-hmm. But I think the next week will really be telling. Yeah. We still are keeping our capacity restrictions, about 20, 25 people. So. Mm-hmm.
That's good. I think it'll be exciting for everyone. So it's a competitive market. How do each of you differentiate your product? Whether I'm talking about the product being services as you build the property, or as you renovate it, or in terms of the physical aspects of the buildings, why are they different? Or even in terms of the customer service, maybe even after you've delivered the property and are renting it out, and to keep people in there. We'll start with Adam this time.
Sure. Yeah. I think for us, it's the small things. It's the details. Apartments in general are all pretty similar. They've got bedrooms, they got kitchens. Mm-hmm. So it's not like we're doing anything earth shattering, but a few things that we do and that I think I really like that we do best is our closets. And I know that sounds weird, but these closets, I swear to God, they're like the same closets you would see in $1 million condo. And when renters come in and they see them and they're not just a wire rack, they're blown away. And it's like you close somebody in a closet. It's like the weirdest way to close a deal. So I think the small kind of details like that, the design sense is a little bit more fun, I would say. One thing that I think we do really well is we don't try and go so wacky that we're going to turn off the market, but we're not trying to just make something so neutral that everybody's going to be okay with it. We want people to really jive with it. So like our building on Sheridan, the Mondrian, it's got this super badass garage that is, generally speaking, just concrete and steel, but we've got, I think we had the muralist's name is Sekula, paint like this 5,000 square foot collage mural in the parking lot. And it's where every tour ends, which you would think would be a weird place to end a tour, but it really speaks to the building, and it's cool. I mean, it's a fun place to live because of that.
Rob, what about you?
I totally agree with Adam. We're not reinventing the wheel here. It's not rocket science to, building these apartments, but I totally agree. It's the small things that matter. We usually invest a good amount of dollars in our units. It's the small things. So for example, solid core doors. We usually try to do exposed brick in all of our buildings and all of our units. Since we're usually working with existing buildings, it's usually not that hard to find some exposed brick to clean up and seal in the units, which gives it a nice touch, versus sort of doing all gray or white walls, which a lot of units, may have. We used, smart thermostats, smart door systems. So our tenants don't have keys to their doors. Everything is with their phones to get into their units. So we try to make it sort of a higher end sort of feel and environment. And we have units that are small and we get really good rents on them because I think of some of those high end finishes and those small touches and, the latch and the taller ceilings that we usually try to, achieve. I mean, we have 500 square foot 2 bedrooms that we lease for $2,500 a month. It's $5 a foot, that you think would be crazy. But, when you have, real hardwood flooring versus LVP or, with some exposed brick, and then we're usually throwing, fatty water heaters and furnaces horizontally above closets to maximize the floor space, you can really get a lot of that, 500 square foot apartment. So it's really thinking through the unit, horizontally and vertically, and, the small things, they may cost a few more bucks, but you get happier tenants, you sort of lease up a little quicker on the front end, you usually get higher retention. So, I think it's all in the details.
Okay. David?
I agree with a lot of what Robert and Adam said, and just to continue to add to this, it's really bringing on the best teams, the best cultures to start, and who can add a lot of their value. It's the architects who see, have done 20, 50 of these projects in these neighborhoods, other neighborhoods, other cities who have seen different things. The best leasing teams who really understand, the leasing process, understand how to sell. Understand this, about different projects, go on many different tours. And then, really for each neighborhood, each street, wherever you are, you want to be a step above the rest. You want to do things differently. You want to really wow the customer. On every tour, you want to be able to point out, these 5 things are different. You want to know where to close the deal, how to do things, like I say, differently. Because 20, generationally, or every 10 years, every 5 years, the renter changes, the desires change, and I'm convinced that the renters these days and every year become more and more sophisticated, and they desire more. They know their options are more and more, you can so in every detail, everything that you do, you need to become more and more aligned with becoming the product that is above the rest, but at the same time you got to control the cost. So
Yeah,
to a certain extent.
no, I mean, what you're saying is you have to know your competition and you have to know your customer, and it changes constantly.
Yeah.
Right?
Well, to that point, David, I know we've never met in person, but I've seen your building and panorama, and I'd be lying if I said we didn't steal anything from that. I mean, you guys did an excellent job, and I think that like you said, you experience things in other cities, maybe the same city or other buildings, and you take the best things that you see, and that's what we're all trying to do. Is we're all trying to not one up each other, but we're trying to take from other people and the things that we like and try and implement it into our own buildings. Because for us, specifically, we try to, we're not the best at everything. We're not the best at anything. We're really good at a lot of stuff, and we try and get other people who have done it right, and take those ideas and kind of implement it into our own. So good job on Panorama, because it has influenced us on some of the stuff we're working on now.
Good stuff.
I'm gonna have to go there and steal some ideas.
How do you differentiate your product, Mike?
It's kind of more of the same of what these guys said. They kind of all hit it. One thing I'll tell you is being in the third party business, we get the benefit of seeing a lot of people's design, and we get to walk through the evolution of it in real time, and then execute, and then see how it's received in the market. And like Adam, I wouldn't be lying if I told Rob that I don't use any of his stuff. They did a really good job of picking out some selections in some of their renovations over the last few years that I'm now using in other markets. And, the funny thing about what we do is, as I said, we're renovation contractors in Chicago. So we work with guys like you, and work through the design and the execution here locally. But we get the benefit of taking that Chicago level experience to other markets. So, we've been very lucky and fortunate and successful in other markets doing that. One I would name is, we just finished a project in Bozeman, Montana. And when we went to that market, we didn't see anything that is like Chicago. What we saw were 1,100 square foot, 2-bedroom, 2-bath apartments with knotty alder trim and carpeted bedrooms, and black appliances. Maybe they were stainless if they were upgraded. And we saw 800 square foot 1-bedrooms, and that's the entire market. We went into that market with a 500 square foot average unit size. So we eliminated hallways, we eliminated, unnecessary closets. We created an amenity space that was really efficient and exciting. And we took a lot of the kind of style of a Chicago urban environment and pushed it to that market. And when we tried to raise capital around that, we were having a lot of trouble because there were no comps, literally 0 comps in that market. But we just had this, we took a risk. We thought was the right risk, but we took a risk, and we ended up leasing that project, I think 20 or 30 cents above pro forma, and we leased the entire building in about a month and a half, in the face of COVID. But I'll be honest, if you look at the finishes, some of those things we took from the guys at North Park Ventures. They've done very well with a lot of their, forward-thinking design. The other thing I would say is all of us, Adam, you're in the business too. The flexibility you have on the construction side to pivot as things change while you're doing something. You may design a unit that's got a wing wall for a bedroom nook in a studio, for example. You may walk that space and take that bedroom nook out, and it's cost effective for you because you control the labor and the cost and the materials. I see Rob do that in buildings that he's renovating also. So, for us, we're always trying to focus on what are other people doing better? How can we apply that to our units? What does a market have and not have that we think it could benefit from, whether it's there or not, right? So that's kind of what we've done. We've seen things change in the market. One thing I'll touch on is, we have a portfolio in Pilsen, for example. And up until about a year ago, we were renovating all of those buildings and stubbing in and roughing in for laundry, but not installing laundry. We would put it in the basement and try to capture some extra revenue because we could. And this entire COVID thing has flipped everything on its head. Every new lease that we have for a unit turn, everybody's demanding laundry. So now we're kind of coming back and popping in laundry units where we had roughed them in. But just one kind of little data point of how things change quickly.
Another thing I'd add is, really differentiating product. I mean, marketing is so key.
Absolutely.
Really building the brand.
Yep.
Really building that brand early. Getting that wrap up. Really having that powerful brand. Really putting the thought and putting the knowing when knowing when your idea is not good, and knowing when you should really put the dollars in and pushing that throughout the whole building.
Yeah,
putting the brand standards in. And
yeah, to Mike's point, I mean, I think it's and I appreciate the kind words, Mike. I think it's really important to be thoughtful with your finishes and selections. I usually go into a lot of apartments and you've got a one-tone shaker cabinet. We recently tried go in a different direction, doing 2-tone cabinetry with brass hardware, brass fixtures, and sort of maintaining that theme throughout the building. as it related to, even the facade of the building and sort of creating a property that was sort of cohesive and consistent throughout. And, we leased up that building. Granted, it was only 12 units, but we leased it up in a few weeks. Everyone just loved it at first tour. So, I think having the washer dryers in there is critical. I think, that rent premium you get is worth it all day long. People care more and more about convenience. But I really think being thoughtful in finishes and the layout, to Mike's point about, being efficient, getting rid of hallways. We recently actually did a 24 unit building with Mike where we bought a 24 unit building with 24 one bedrooms, and we increased the bedroom count in that building from 24 bedrooms to 60 bedrooms, all 2, 3, and 4 bed units. So, 3 bed, 3 bath units, 4 bed, 3 bath units, duplexing on the ground floor, sort of redesigning the entire building, using the window lines, and, getting very efficient with our layouts and approach. And, it did very well for us and helped that, Mike, was, great with, constructing it and being a third-party contractor. But yeah, it's I think, to David's point earlier, having the right team on board, we have a super strong team here internally, with our head of construction, our leasing team, property management team. So I think, being thoughtful from start to finish, you really have a product that, maintains occupancy, strong rents, even throughout the pandemic. I think, when you have well-finished product and good locations, you still do pretty good despite a pandemic. So agree with everything that's been said.
And David, kind of touching on one thing that you said about marketing, we do all of our own marketing. We hire third-party leasing and management companies for stuff that's out of state, but where we've been successful recently, we do all of the social media, all of the web, all of our, everything that's on our website, all of that stuff is done internally. My partner is a little bit of a tech junkie, so he decided that he would install multiple cameras on all of our construction sites. So not only can we document the progress of our construction sites and the active, building of the building, but also so people can log in through the web and actually see the active construction. And the reason I bring that up is because anything you can do that will differentiate yourself just a little bit makes a difference more than you think. It's the little things that add up over the course of the entire project. We still get people telling us today, and we were completed 6 months ago, we still get people today telling us that they're looking and using our webcams so that they can see the building, or how cool it was to watch a building go from, land to literally 4.5 stories tall over the course of, 10 months or whatever it was. So I think that's a really important point, David.
Oh, yeah. Absolutely.
So Mike, we get access to those cameras now and all of our projects going forward?
We can set them up on your buildings for a small cost.
I don't know if you want Nick having access to those cameras. We'll be counting how many plumbers you have on site every day.
Yeah. We have nothing to hide.
Yeah, no, of course.
So Adam, they touched on adjustments with the pandemic a bit with in-unit washer and dryers. Adjustments here, what are you seeing in terms of what you need to do now that we're in this pandemic? And then even long-term, are you making adjustments to location? Do you not want densely located urban environments anymore? What are your thoughts on that?
I still want density. I think that the pandemic has definitely changed our design criteria a bit. So we were in the midst of designing this 175 unit building in Cleveland. I remember sitting at a boardroom table with the architects and all the partners, and this was in March last year, and saying, how is COVID going to change our design? And everyone laughed because, there's no way we were going to change our design now. We already started designing it. And it took about 2 weeks later till we decided, all right, pencils down, let's actually think about this. How are we going to implement change here? So the one thing we are very cognizant of is functionality of space. I don't think that people during the pandemic were upset because they were in a 500 square foot box. I think they were probably upset because they were in a 500 square foot box that didn't allow them to work from home, or they're on a call and their significant other was on a call and they couldn't get work done at the same time. Mm-hmm. Or maybe they didn't have access to outdoor space and, it was freezing cold, but they couldn't get any fresh air in their apartment. So every unit we build has outdoor space, and not just 4x4, like sit out on a single chair and smoke a cigarette, like real outdoor space, 12x8, something where you have really significant space so you can go out there and enjoy yourself. Every unit we do, for the most part, has workstation, like a really nice built-in workstation so that you can have a separate space within your unit. Even our 400 square foot studios have that too. And we think that's really important. And that, I guess the last point, kind of to go back to what Mike had said, is every building always, well, not every building, but almost every building always looks really good on paper. And you could be, modeling it and it can be, $3 a foot and just sing. But then when you start to build it and you're standing in it, it just doesn't always feel the same. So you need the flexibility. And it sounds like Robert and you guys have done this before, where you got to make changes on the fly sometimes. We had big studio units in our building on Sheridan in Uptown, and we stood in the space and we're like, this just doesn't feel right. We need to throw a wall in here and make these convertibles. Those 6 units were the first to lease at our new building. So it's not, we're not totally moving structural walls or anything like that, but even those small things that you have to have some sort of flexibility on is important. And I think given COVID and kind of the way the world has moved, obviously been a lot of suburban sprawl over the past year. I personally still feel that there is a desire to live within close proximity to experiential real estate, like Studio 3 or restaurants or, whatever it is. I like to live in an urban environment because I can go to the gym, I can go to my office, I can go to a game at Wrigley Field, and I can't do that if I'm, living 30 minutes away from here.
Mhm.
What do you guys think of that? David?
I agree. I think I think there was a lot of it's like we during the call it the midst of last year, a lot of people were kind of what do we do? How do we redesign buildings? And even we thought well, should we add like a massive walk-in fridge and freezer so people could drop off groceries? And we didn't want to we didn't necessarily want to make any call it semi-radical or even like changes to our buildings that would where we'd be like pioneers in a sense to that would affect what we would do. But so we took a step back and kind of obviously made our everything that we could touchless. But I think that people want to be, like Adam said, downtown. I think that we're going to see more and more people moving downtown pretty quickly here. They want density, and at the same time, I think that I think we're going to return to more normalcy faster than we all think. We're like at Panorama, we're 80% leased up in about 3 months here, and I think that we're not like we didn't make many changes overall vis-a-vis what some of I think what was put on the table. You go to some other cities, okay, down south, go to Miami, you go to Austin, Texas, Dallas, Texas, and there's not many larger changes. And I think people are moving back at a faster rate. So.
Okay. So I think we've covered the pandemic. So I am hearing optimism out of everyone, but also based on real experiences. So I think that's reassuring certainly to me. So today, material pricing, it's been in the news, I don't know, for a while now. How are you seeing it? How are you feeling it directly in the projects that you have going on, starting? Just tell us about your experiences. Maybe Rob, you mentioned a project you're ongoing with. Why don't you start?
Well, considering Mike is my GC, maybe I should stay out of this one. Yeah, material pricing is going down 20%, right, Mike? we're not naive. We know material pricing is going up, drywall, steel, lumber, appliances, and timing too, right? Lead times to get product to the site is taking longer. We're planning a lot more on the front end now and buying for units that, we'll be rehabbing, 3-6 months down the road versus usually, we order appliances a month ahead of time. So, I think material pricing in general is going up. That's a real thing. However, I do think that, the subcontractor market is a little soft and vastly different than it was pre-pandemic from all the conversations we're having and what we're seeing, which I think is helping sort of bring down the net impact to the bottom line for developers such as myself. So you're not getting the dollar for dollar increase in your, construction budgets as you're seeing in the material world, the commodity world. But I think it's just something that we're all dealing with here as developers and GCs. I think communication is key, speaking with your, construction folks and GCs and subs, and just having a lot of communication to avoid any surprises down the road, and having conversations much earlier on than you normally would to plan for everything, and building in contingencies for escalation, not just your typical contingency, is key as well. So, yeah, it's a real thing that we're dealing with on a weekly basis. There's changes in supply of inventory for appliances, for units that we have coming up that we need to get appliances in for some of our projects in 2 weeks from now. And then look around at different suppliers. So it's something we're dealing with, but I think, the industry knows that there has to be more innovation and more thought put into, combating the increase in, material pricing.
Mike, are you seeing, would you say material pricing is a bigger issue, or the logistics of getting the materials is a bigger issue?
It's both. I'll be honest, if you took, I've got one good example, suburban single family home that we priced last year. The lumber index was at about 400 in May of last year. And to build a 4,500 square foot house, the lumber cost was about 48,000 in material. We rebid that in March of this year, and it was 96,000, bid down from 108. So it was more than 2x. If you look at the lumber index as of this morning, it's at 1380. So it's gone up 330% in a year, year over year. It's come down. It was at 1,800, I think, about a week ago, or 1,700, maybe that was 2 weeks ago. So the good news is, everybody, that it's coming down. I don't know how much, but it looks like it's tempered. I asked a couple of my subcontractors recently, as we're kind of working through some stuff with Rob and some other customers. An electrical panel a year ago was $45 at the supply house. Today it's 70. That's like a standard 20 position 100 amp panel that you see in any residential apartment. Conduit went from $27 for 100 foot of bundles of conduit, 10-foot lengths, to $47. So that's a 2x. Number 12 copper wire is now $95. It used to be $45. One thing that we're seeing is, kind of mentioning Rob, the sophisticated people are getting more thoughtful about how they're doing things. It's been very easy for the last 5 years. If you had the internet, you could go on the web and go source material overseas and get it here pretty quickly. I think Trump threw a wrench in it with some of the tariffs that he imposed on China, but the Chinese are smart. They moved to Vietnam very fast, where the tariffs weren't as big. So we didn't see the impact, right away. However, we're seeing some, like my electrician, he wants to, he's talking about using aluminum wiring instead of copper wiring. We're talking about this with your construction guy, Rob. And it's permitted per code, in certain circumstances. And people have just shied away from it because copper is supposedly better. It's got a longevity to it, but aluminum's half the price. And if you use it correctly, it's like buying, I don't want to make the wrong comparison here, but it's like buying a Ford versus, another more exclusive or high-end car. They probably will last the same amount of time if you treat them properly, right? If you maintain them correctly. So that's one thing. The other thing is The supply chain is definitely breaking down. You know, we're having trouble getting plumbing fixtures, not as much like electrical fixtures. Appliances are a huge issue. Every call we have, I'm sure everybody on this call and everybody that's listening in, the hot button right now is appliances. Very difficult to get. We used to have suppliers that would let us purchase them even, or lock in pricing for a year or for a project. You know, we have a 173 unit project in Grand Rapids, Michigan. We locked in pricing in December. I have the emails from the supplier, quote unquote, locking the pricing. Tried to rebid it last week just to get the update. Pricing's gone up 15%. They can't lock the price. It's locked for 30 days. You can't store it even if you pay for it. You got to take possession of it right now if they can even get it to you. So that stuff's happening across the board, and I don't think it's going to go away for a little while, especially with all the demand. You know, the last thing I'll point out is, you know, construction pricing is definitely going up. We bid a 280 unit building in Grand Rapids ground up about 3 months ago for ourselves to develop, and we hire third-party GCs to do this. Pricing is up 30% year over year in that market for ground up construction. So in order for us to make that project work, construction pricing has to either come down 18 to 20% on the nose, or rents have to climb 20 to 24%. And in that market, Grand Rapids is a very healthy market. There's a lot of demand there. Rent growth, you know, when we had rent growth all the way through the pandemic, which was phenomenal. But for rents to go up 20 to 25%, that's there's a meaningful jump in wages, right? And perception in the market and behavior in the market. So I don't know where we're going to end up with all of this, but there's definitely going to be an impact. And maybe it's somewhere in between. Wages go up, rents go up, construction pricing tempers a little bit, you know.
So Adam and David, when you're looking at, following up on Mike's last point there, when you're looking at ground up developments and planning, how are you considering all the things that Mike is talking about in future projects? Adam, go ahead.
Sure. You know the saying, hope for the best, plan for the worst. Contingency has never been more important, and actively being thoughtful about your contingency. VE starts day one. So we work with a pretty sophisticated design team. We work with an excellent architect. We do a lot of work with NOR, their Chicago office. And even if things are going smooth, we're always looking at 3 different options. So right now, a year ago, we would have looked at a building and said, it has to be wood. Now we've looked at it in 2 different ways, wood and steel. And then probably mitigating risk in other parts of the deal. So we all know interest rates are historically low, but that could change just like anything else in this life. So what are we doing to mitigate the risk of interest rates? We're proactively buying caps or exploring buying caps on certain deals that lenders aren't requiring, but wherever you can lock in and mitigate risk on a deal, I think it's worth it. It's like buying an insurance policy. I'd say the other is buy yourself time. We historically give ourselves pretty long runway on a construction interest reserve to be able to make the smart decision. If it's not the smart decision to buy wood 2 weeks ago and it's smarter now, you need to be able to have that sort of flexibility, and your lender should support you in that too. So I think that, you know, it's hard to make deals pencil as is. It's even harder to make deals pencil when you have no idea what the price of the material is going to be. And the more that you can give yourself contingency and have the bank be your true partner in that, I think is important.
David?
I agree with everything Adam said. Make sure that you have, to harp on that, make sure that you have years, you know, plan for 2 to 4 to 5 years out. Make sure that when you're working with the bank, you have 4 or 5 years on that bank loan, because you may need it. You know, while we're talking about material prices going up, you know, the city being more and more difficult in Chicago to get deals done in, you know, and people moving back, you know, everyone would think, well, it's going to be easier to, it's going to be, the rents can go up. Well, rents may not go up. and interest rates may go up. So what if you're caught in the pickle here and interest rates go up, and all of a sudden you're going to need, we get in a situation where, the inevitable happens and you need a year or two, and you don't want to be caught in a foreclosure or something. And you need those extra 2 years or year of interest rate, and work with your bank to let things happen where they're going to happen. And so that interest reserve is key. That extra time with the bank is key. Now, clearly, like, back to my last point, there with material pricing going up, whether it's prices, construction prices go up 10%, 20%, whatever that true number is. It's going to be harder and harder for all the construction starts to happen at the rates that they were happening in 2018, 2019, et cetera. So with all the renters moving back, it's going to be an interesting next 18 months based on however many jobs come to the city, to see what happens with rents. I think I think I know.
So just challenges with the city, following up on that, David,
Yeah.
the affordability requirements. How are you considering that when that?
Well, I think there's two challenges with the city. Two main challenges. Let's put it that way. I think number one is the affordability requirements, which is not clear. I think the 10% or 15%, whatever that was challenging at first. I mean, to hear 30% is just completely outrageous for a lot of projects. And then the second one is to have a desire to design a beautiful building, and it's architecturally beautiful is something that attracts tenants, is something that we all want to do, that could be our choice, that can fit in with a neighborhood, that a neighborhood wants to have their hand in. But then number two is the city to want to go back, spend 4 or 5 months wanting to have 7 different facades or whatnot is obviously takes up a lot of time, and at the same time will add a lot of costs, which could make a project unfeasible, and which will make which will really slow down the amount of projects that could happen, and really be toxic to a lot of what Chicago is trying to accomplish.
Yeah, I mean, David, to your point, I think, unfortunately, I think a lot of developers like the ones on this panel will probably look elsewhere and outside of Chicago because of the affordability requirement. And there are developers who have figured it out. I mean, if you look at Cedar Street, they did an excellent job. They figured out, okay, the best way to meet the affordability requirement is build smaller units, and therefore you're allocating less space to ARO, and you can still make a deal pencil. But is it really realistic that every building that all of us are going to build are going to have 300 square foot units? No, and it's not, because that's not what the market wants. So I think the reality is there are a lot of smart people in this business, and I think that this is going to be challenging and maybe weed out some of the ones that can't figure out a way to make it work. But I think the harsh reality too is that a lot of us are probably going to be pushed into markets that we don't necessarily want to be in. We want to work in our hometown, but we may be pushed out because of the governmental kind of red tape around that.
Yeah, 100% agree. I mean, to Adam's point, it would be amazing to continue to buy and develop and own property in Chicago, and would love to keep doing that for, the next 50 years. But it's a reality that we're dealing with, the upcoming ARO ordinance that kicks in October 1. And, construction costs going up. I think, if the city really wants to keep investment in Chicago and increase, the affordable housing stock, which, I believe they have the right intention, the right goals, but it's the execution that I think, needs to be rethought a little bit. I think there needs to be more public and private cooperation with how you get there versus just imposing, you know, a flat 20 to 30%. You know, I mean, if you want to, we own a site at, you know, Lake and Halstead, that's north of Lake Street. If you want to do residential, there's 30% ARO. That it just doesn't pencil at 30% ARO. You know, no matter, you know, how much you bought the land for. I mean, I can tell you if you probably bought it for free with where construction costs are going, it'd be tough to pencil out, you know, a 30% ARO project. So I think, you know, there being more public and private cooperation, there being more openness on the city's part for, you know, materiality that's allowed, you know, in our buildings. You know, for example, the PVC pilot program was a great idea. The former building commissioner, you know, Judy Friedland, did a great job sort of taking lead on that and putting that in place. You know, we use that on all of our buildings that are 4 stories or less. You know, you can use PVC, which saves you a good amount of money. And taking that one step further to sort of extrapolate that across all other aspects and components of a building and seeing how you can incorporate that if, you know, truly the ARO requirement is going to be 20% plus, you know, to help sort of combat that economic hit, you know, that we as developers are taking. Because at the end of the day, there are certain, you know, minimum return requirements that we all have on our end. And if it's placing money in the city of Chicago or in different cities, you know, it's a tough decision that ultimately is going to come to a head and that people like us are going to have to make. And that's going to drive future investment and development and building inventory in general in the city of Chicago.
So we've got a few minutes left. I got a question from the audience that I think falls into the value add category, which I think is interesting that it's 1253 and in construction. I don't think anyone has used the term value add yet. So I got a question from the audience that probably is directed more at Rob or Mike. When you're going in to renovate a building, you're buying a building, how do you decide? Do you do one unit at a time? Do you clear the building and gut it all at once? Do you do half? You know, what are the considerations? That's a complicated question and it's deal dependent, absolutely. But what is your thought process? What's the best way to do it? What should you avoid? Maybe Mike?
Yeah, so, you know, there's probably a couple questions within, you know, to answer the question. You know, the first thing would be, is this a large scale building that you're financing, or, you know, when you're buying it, does the financing require that you're keeping some sort of threshold occupancy? Assuming that that's not the case, you know, in an ideal world from a construction perspective, you want that thing empty. I mean, we just got done rehabbing 400 and some units and adding laundry to 450 of them, or 450 units. We rehabbed 400 and we were bringing laundry and risers into units that were occupied. And, you know, part of the building's 18 stories, part of the building's 12 stories. So you're kind of going in between and trying to match it all up. I think, you know, we're probably in the process of doing that in some other projects right now. So in an ideal world, you'd like the building to be empty. If it's a smaller building, I'm sure the finance, you know, the economics of the project probably warrant vacating the building, right? But if it's just a simple value add, and let's say it's 150 units in a high rise or a mid rise, and all you're doing are kitchens, baths, flooring, doors, trim, maybe some plumbing valves, maybe you're adding laundry by tying into something that, you know, is adjacent and permitted by code, then, you know, I don't see a reason to vacate the building. It doesn't affect our execution. We just have to set things up differently to make it work. But, you know, I leave the first half of that question probably to Rob, because, you know, it's more of a financing thing and this is kind of part of their niche.
Yeah, I think Mike hit the nail on the head. It's a multifaceted approach, you know, looking at, you know, if you have certain debt yield requirements, you know, with your lender, and you got to maintain occupancy and certain cash flow, depending how much interest reserve you want to capitalize on the front end, which is your cost basis. And then it's, you know, the feasibility aspect of it. I mean, to Mike's point, you know, we're doing this right now with 81 units with Mike, you know, and we're actually keeping the building operating. And it's a tier by tier approach where you're really seeing what the plumbing stack and overall layout of the unit looks like on a tier by tier basis. Some tiers are much easier than others where, you know, the plumbing stack is an ideal location and you can tie into existing, you know, drain and waste and water, et cetera, and you keep that tier going. Other units, maybe you need to give notice to the tenant above or below you to get in there to, you know, make some connections. So it really depends, you know. the 81 units is part of a larger project, and there's another 34 units in a separate building across the street that we're actually going to vacate entirely because it's a little tougher, and there's other aspects of it that came into consideration. So I think it's a very situational, answer. Ideally, to Mike's point, yeah, you're working with a blank canvas, you're emptying the building out, and it makes everyone's life a lot easier, especially Mike's. But if you got to keep the building going and operating and cash flowing, then I think groups like 3F have really sort of figured out how to do that, and hit your schedule and budget that you need. But it does cost a little bit more, and the schedule is impacted a little bit more if you do keep the building going, because there's a lot of considerations you got to make for something as simple as just cleaning, right? You got to clean up after yourself a lot more, so there's more labor costs. So there's a lot that goes into it, but hopefully that's not too many answers within an answer.
No, that's the thought process. You can't, that's an impossible question to answer without the specific example.
Yep.
So we've talked about a lot of it's been a tough past year for everyone for different reasons and different ways. We've talked about a lot of the challenges today in the next year or so. What's everyone excited about over the next 12 to 12 months? We're still doing this. We still come to work every day. We still get up early and go. Adam, I'm curious, what are you interested in? What are you excited for?
I'm excited to start going out to eat again. That's for sure. Professionally, we have at Maverick a lot of joint ventures that we're focused on. My philosophy has always been I'd rather own a little of a lot than a lot of a little. So we have really good partners in different cities that we're working with, and we're not slowing down anytime soon. So I really think professionally, I'm excited to scale the business, take on projects that are outside of Chicago or maybe in Chicago with strategic partners, and find new unique ways to make a living. Every project I do, I learn something new. So I guess I'm maybe most excited to learn in the next 6 to 12 months.
Great. David?
Likewise, we're we're excited to get back to full strength here in the next 6 to 12 months. We're really optimistic about everything that we have going on. We have some really exciting stuff planned in other cities right now. While we're still, we still have a lot of work to do in Chicago, and we're still really excited about Chicago. I think there's a lot of opportunity and a lot of, like Adam said, there's a lot of really good, partnerships that we're working on, but a lot of really exciting things that are going on all across the country, specifically in some key markets. So.
Okay. Rob?
Yeah, on a personal level, I'd say just resuming back to normalcy and traveling, and going out and just seeing friends that you haven't seen in a year. That's going to be real nice, because some people took COVID very seriously and told you to stay away 50 feet at all times. So now it's going to be nice to finally see people again. On a professional level, I say in Chicago, property tax certainty is probably the number one thing that we're most excited about, because uncertainty is the number one killer of raising equity and financing. So I think just having certainty will be nice, wherever that lands. And then, to David's point, we're working on some projects in, Minneapolis, hotel repositioning in Florida, and some other stuff we're looking at, and, looking at stuff in other markets as well is exciting, and growing our team and expanding our operations. So all good things ahead for us as well.
Great. Mike, you want to close it out?
Yeah, I mean, I would just kind of echo what these guys have all said. For us, it's exciting to be back in the office, have the entire staff starting to come back in, not necessarily, we've been alternating quite a bit until recently. So it's great just to have the entire team and what I consider family around. And then kind of on our acquisition or development side, I'm excited to start traveling more. I started to a little bit a few months ago, but now with things really opening up and the vaccines and everything and the COVID narrative kind of tempering a bit, it'll be exciting to get to other markets and start seeing what opportunities lie for us, because we, like Rob and I think Adam too, and it sounds like David, we are focused on other markets where we can see the return on our time and our investments probably stronger than where we see them in Chicago for the near term. That doesn't mean that we're out of Chicago permanently. It just means that right now we think the best place for us to focus is probably outside of Chicago and some of these other core markets. So
That's great.
Yeah.
Thank you all, gentlemen. I see the man in black has appeared.
Thank you, Matt, and great job moderating. Thank you, Mike, Adam, Rob, David, for participating, for your candor, and for the expertise. I know everyone has gotten some great takeaways from this. Special thanks to Mike Obloy from 3F Construction for being one of Mid-Market Summit's sponsors. And we really look forward to being together live in 2022 for this event. Another special thanks to Sabrina Wetrig, who none of us can see, but who all of us, at least here on the panel, have experienced. So Sabrina not only came up with the idea of going virtual with this, but then created all the topics, scheduled everybody, organized us all, prepped the moderators and panelists, actually dealt with technology. It's not as easy as I thought, just to pop a couple hundred people onto Zoom for an event like this, and then promoted it so that enough people come to make this worth everyone's while, not only on content, but just on having us all get together. So Sabrina, thank you. Excellent job on this. As a reminder, a recording of this session will be on kaisergroup.com on the Mid-Market Summit page. So feel free to share a link to those who may have missed it. Thank you to everyone for a very successful 3-installment series of the virtual Mid-Market Summit. And again, look forward to seeing everyone next year live. Thanks so much.
thanks.